Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. We got a bunch of stuff to talk about today. We actually very purposely worded today's YouTube video about invest, trade, or sell. We're going to really do a deep dive into that. And I'm going to start today out discussing the fact that there is just absolutely amazing short-term volatility right now, as long as you know how to interact with it. Remember, everything that we talk about, most of the people that come into our community, we get some really hardworking people, both here on YouTube as well as in our Discord community. Some people want to quit their 9-to-5 jobs. Some people just want to have a second income for retirement. Most people actually swing trade that where they have a full-time job or they're running a business, they're looking for something else to do. So I'm specifically talking to you today because the number one thing to make those dreams happen, which is leave that 9-to-5, have an extra income, manage your portfolio while you're in retirement, right? The number one thing to do is to protect that capital because that is your business inventory. We're going to spend some time talking about that today too. Obviously, we're going to talk about earnings that are coming out. We had big tech earnings yesterday, big disappointment, especially Alphabet. Microsoft cloud business slowed down a little bit. That's the big part that they are really have been leaning on for why the stock has been going up. So remember, everything we talk about earnings has to do with expectations. And if the one big thing that that company is leaning on is no longer pushing in that direction, you're going to get a little bit of a warning sign in the other direction. I do want to say hello to somebody this morning. Kim, where is Kim? Kim, I wanted to say good morning. Just absolutely fantastic job using that calendar trade and a couple of other patterns that we have that we've been kind of unveiling in the community. And I just wanted to say I'm very proud of you for seeing that success you've had recently. Some awesome trades, some really, really good trades. So I want to start out, before we dive into things, I just want to start out with a quote because everything we're going to talk about today specifically and going forward throughout the rest of 2022 is going to be about determining if there is a reason to accept risk, what is the likelihood of the profit target, what to do in both of those situations, and especially if the answer comes back, no, it's not worth it, you need to be okay with being in cash or dialing back a little bit your exposure to the market because, look, we all know Warren Buffett, right? Warren Buffett's big thing is I never sell stocks that I love, right? Reading a bunch of books, especially right now, recently on value plays, because I think we're going to have a bunch of big value plays at the end of this year, probably early next year, if the market pulls back the way everybody expects it to. We're also going to take a look at the economic data that's coming out. We got some really big stuff that is in the pipeline. This is actually for tomorrow, for Thursday. You can see GDP that's coming out tomorrow. Jobless claims. We have PCE, personal consumption expenditures. There's a lot of stuff coming out tomorrow. And then we throw the the earnings data in there. Oh, Boeing just reported. We'll take a quick look at Boeing in real time while we're on top of that. Looks like it's down a little bit. So what we're going to discuss today is investing, trading, and whether or not you should sell or be in cash. I'm going to tell you what I'm doing right now. There's one type of trading that is absolutely, oh my gosh, I just can't wait to be involved every day. And one side of the market that's a little bit more where I'm just kind of staying away from an aggressive perspective. We did talk about Meta stock on Monday. Got some amazing feedback based on the argument that we built for the stock. Part of it was technical, but most of it was based on the long-term fundamentals of the current cash flow. Meta's actually down a little bit right now. It after hours, I believe today on October 26th is when it reports. So we'll see how that unfolds after hours today. Remember about the Meta stock, because we got a lot of people interacting with that particular comment. We were very specific. You want to write this down. We talked about a P1 entry if earnings comes out and does everything that we said. Just as a side note about what I do, we actually had some good questions about this recently about trading earnings. There was a really big point that happened in our Discord community yesterday. And if you can get into our community, if you can actually come in and join a boot camp, we're actually going to have a 5-day trial on the boot camp starting next week. I'll let everybody know about that on Friday. If you understand how the market changes, if there's any one big thing that I can virtually guarantee you in the stock market, is the stock market is going to change. There's going to be updates. There's going to be innovations. There's going to be new ways to interact with the stock market. Now, what never will change is tape reading and order flow. You can't deny the footprints of big money pushing stocks around, right? But here's the thing, and this is the conversation, and You know, it might have actually been Kim who brought the question up yesterday in Discord. Kim, I think it was you actually, about when to trade earnings, trading them into earnings or trading them after earnings. I just want to give some insight. Like, if you don't happen to know, I've been trading for 23 years. I had two firms in New York City. It was very, very common, let's say back in the day. I don't want to make it sound like I'm an old man, but back in the day, to be trading, you trade your entire day and then earnings will come out after hours or pre-market, but more specifically after hours. And you try and get involved in that volatility, and it would be kind of fun, quite honestly. You were trading with the market makers, you were trading with the specialists. There's a lot more human interaction, and it was easier to read after hours. You could read the level 2 quotes, you could read the bids, you could read the offers. You'd watch market makers stepping up and down, watch ECN stepping up and down. ECN is Electronic Communication Network, which is nothing more than a fancy way of saying how to place your order digitally with like an ARCA ECN or EdgeX or BATS. Those are the electronic communication networks. You really want to level up your game. Learn how to capture rebates when you're placing your orders. You can actually get paid to place orders. Most ECNs give you those rebates. You just got to check your broker dealer. So anyway, the point that I want to talk about here is the question that was brought up yesterday about trading earnings prior to or after. So if we go back to the Meta story from Monday, we were very clear that we were looking for a P1 entry if it does what we anticipated. So again, I'm not in it yet. I want to be clear about that. This is a big part that where you only hear part of the story. You need the entire story where it's if this happens, then we plan to do this. So if we can go back to two trades from last week, which really illustrate this. But I want to get back to the first point. The first point is back then, we're talking 2000 to let's say 2010, there was a lot more personal interaction in the after hours play. Now in 2022 in the stock market, algorithms are actually reading headlines and processing that data in a heartbeat where numbers are flying all over the place. It's up, it's down, it's everywhere in a blink of an eye, right? I don't fight that. I just want to be super clear. I have this like big thing at this point in my life where I want my trading to be as stress-free, as low stress as possible. I want it to be obvious before I decide to get involved and put my hard-earned money in harm's way, which is risk reward, right? So we had two trades from last week, and I just want to highlight these trades. One of them was Netflix after earnings came out. And if you remember, this is the level that we were talking about trading for the week. And the other one was IBM. Now you'll notice, and let me just pop this in here as well. You'll notice that the trade that we're talking about is after earnings came out. That's a very important distinction to make. And you can see actually now IBM's 9 days in a row with higher highs. That's a pretty significant move. I'm actually expecting, in the way that we look at things right now, IBM is what I call a bullish echo, where a bullish echo means the side of the market is really obvious, but because of how far it's gone recently, it's no longer a swing trade for me until the risk reward resets itself. So remember, every time we're looking to put on a trade, what is the likelihood of achieving the profit that we're looking for versus the risk we have to take in that moment? So two things on the IBM trade. So when IBM exploded like this after earnings on this gap, it was already higher highs for 1, 2, 3, 4, 5 days prior to this even happening. And then after that, we were very clear that after the earnings came out, we have a reference point that we watch. And then from that moment is where we are looking to take advantage of that earnings play. Pretty clean, right? Pretty obvious, pretty simple to execute. Now, learning the strategy and executing. And remember, there's a very big difference between finding trade ideas and trade management. And I think a lot of people have that misconception that they're the same thing. Getting behind the steering wheel and getting on the road, two completely different things. Turning the engine on and getting out of the driveway, two completely different things. So we're talking about the setups. We're talking about laying out the foundation. Those were bullish trades that we said. And Kim, I think I actually had mentioned it to you that it was a mini calendar trade for the trade that you happen to have mentioned yesterday. So now if we move on over into the large cap tech stocks that have not produced bullish earnings and a bullish reaction, we're just going to take a quick look at those right now. Obviously, we're going to be talking about Apple first. Excuse me, not Apple. Apple coming soon. Google and the company Alphabet. And this is all based on YouTube ad revenue. So we keep hearing this ad revenue thing going on. Snap pre-announced the other day. Snap announced, got hammered, right? So this is a big deal. So Apple, I keep saying Apple, Alphabet right now. We hop on over to both Google and we take a look at Microsoft. So you can see Google right now is down $6. So if we do what we just did and we kind of take a look at where it is, let's just say it's right around that area. And we do the same thing in Microsoft. So now we're not playing the pre-market after hours game where it's like, let's hop in as soon as the algorithms have an announcement. Let's try and fight the algorithms. I got news for you. We're not going to beat the algorithms. Don't try. But here's the big thing. I'm like going back and forth now with the positive, the pros and the cons, the good and the bad. And this doesn't matter if you're day trading or swing trading stocks. I want to be clear about this. If you are engaged in the markets, the algorithms are absolutely your best friend. And I know you might be like, oh no, the algos took out my stop loss and they're out to get me and the market makers are out to get me. They're not out to get you. And you want proof of that? Let's take a look at some stocks where the algos are all piling on in the same direction. If you read the order flow, if you read the tape, if you read sector rotation, if you get good at reading the market, when the algorithms and all those headlines that are coming out and all those fast numbers are coming out, they're all programmed to look at the same thing, basically. So one of them piles on and then another one piles on. All of a sudden, you get these kinds of moves where you really can't mess them up, even if you tried. But you have to be prepared. You can't fight it, which actually takes me to the biggest thing that I want to talk about today, which is this lesson, okay? A big lesson to learn for everybody in the markets is I'm bearish, but stocks are going up, so I'm buying. So now this really depends on what time frame you are trading. And actually, I want to say hello. I just want to say hello to Min. Good morning, Min, and hello, Glenn. How's it going today? So the bottom line on this is getting back to what we started talking about today. It doesn't matter if it's Alphabet earnings, Google, Microsoft, Apple, Meta. It doesn't make a difference. The easier trade, if you're not in it already, that's the big part of the trade equation that we want to talk about with earnings, the way I do it and the way I teach. If you are not in it already, the easier trade is to let all this algorithmic stuff go back and forth after the announcement comes out. And look, I just want to be clear about that. There are literally algorithms, software, whatever you want to call it, that read and interpret the headlines. That's how advanced things are right now, which is why I do not play the earnings announcement game and get involved. It is not the same game. Remember, our number one job is PPC, protect precious capital. That's our inventory. So if you're investing, that's another thing we're going to talk about right now, especially with the specter of large cap tech stocks pull back. It's going to be some chance of selling. You need to make a determination right now. Are you investing, trading, or looking to sell? Now, if you're on the investing side of things and you have stocks that are pulling back, I'm going to go back to what I said before about Warren Buffett. We are not Warren Buffett. We are trading for one of two things. We're trading for capital appreciation on that stock. We're looking for it to go from 50 to somewhere well above 50, or we're looking for dividends. Warren Buffett is talking about holding those stocks forever because he's looking for companies that are going to take those profits, reinvest them back in the company, and get return on invested capital. And that's why he's looking to hold them, because it'll eventually be shown in shareholder value. Normal humans like us, people that are not Warren Buffett, have to have some sort of uncle point where it determines whether or not the story has changed. Here's the thing that, and I don't care if you're investing or trading. We're going to talk about the difference in a second. There still has to be a point where you are investing in a stock where you say, you know what, that original argument that I had for this idea, maybe it's not still valid. I don't, again, you could use moving averages. Again, let's just go to Apple as an example, because we got some numbers coming out. You can see how hard we've been working the Apple chart. At some point, you have to say to yourself whether or not this idea is still good. Maybe here it becomes better. If you understand Dow theory goes all the way back to the original, when the stock market opened. Dow theory says that there's always three trends in place. You have the long-term trend, which most people use the 200 period moving average to determine, are we in a long-term bullish or bearish market in the stock market and your stocks. So you use that level. If we're above the 200 period moving average, your investments are still in pretty good shape. The 50 period moving average is more used for swing traders, and that's kind of the one that we just pulled up over here. This is the 50 period moving average. If we move a little bit tighter and we go into the 20 period moving average, you can see that the 20 moves quicker. The 20 period moving average on the daily chart is basically the short-term fluctuations in price action, and that's kind of the universe where active stock traders live. So there's a couple of points that I want to make here, and this is tying into Apple and Google and Meta and Microsoft and Boeing, which actually just reported earnings, right? You need to determine if the reason you bought that stock as an investment or as a trade, but we're specifically talking about as an investment right now, is it still valid? And I want to give you an idea of the biggest wrong statement that people make is that if they get out of the investment, they are afraid to lose their position. Now, very rarely do long-term moves just happen like that and you can't get in. It very, very rarely, especially if you are doing the research and the game planning every day, like we teach everybody in the community, which is going over stocks and seeing the rotation from one day to the next, tracking them over time, and preparing yourself to notice things. At some point, do you really, and I'm just going to pull up another stock because this is kind of like the poster child for it last year. Do you want to be sitting in ideas where the idea has clearly changed and you keep saying, I know the stock, I know the stock, I know the stock, I know the stock, I know, and it just keeps melting lower. And even this one, which is the poster child, I think, for what happened in the world in 2020 and 2021, where there was a lot of excitement here, but the stock got up to almost $600, very close to $600. At what point does the reason the stock had all that appreciation and the reason you decided to get involved, how do you know if it's still valid and how do you know if it changed? Also, you really want to level up what you're doing in the stock market. How do I know if I should still hold it or even add to it? Or how do I know when it might be time for me to scale back, take some profits, maybe even get out? So that's what we're talking about now today, specifically with these large cap tech stocks, Google, Microsoft, like we said, Meta, Apple coming out. And then you throw on top of that this massive economic headwinds that we have with the Fed, interest rates, GDP coming out tomorrow. We're going to talk about that in a second. You throw all those factors in, and somebody asked about AMD stock before. Joe, we'll take a look at that in just 1 second. What do you do? Now, here's the part where a lot of active traders and investors just need to think one level deeper. I need to protect my capital because that's my inventory to run my trading business. You need to do the same thing, right? At what point does a $575 stock no longer make sense to hold on to that stock thinking it's going to continue? And obviously we're talking about Zoom right now, right? Doesn't matter if it's Zoom or any of the other stocks that we're looking at right now. Google, obviously, right? We're talking about Google, which also Apple coming out this week. We built a big case on Meta last week, right? Because it's down a little bit this morning ahead of earnings. And so on and so on, right? Microsoft being in that equation. Now, here's the big, again, everything we talk about here is for educational purposes. It's up to you to make that final decision, right? I want to be clear about that. However, the way I do things, I am more concerned with if I accept risk, how do I know if that idea is still valid? What do I do if it is? Again, to $590. Pretty easy to tell when it's still obvious. And I just want to give you a little bit of heads up because I want to draw you into this conversation because it's that important. There were a lot of people who made a lot of money on paper in 2021. The stock market was going up, quantitative easing was in place, valuations were getting really out of control. And it was kind of cool, right? However, we have people coming into our community, people coming into our boot camp. One person yesterday, we just heard that just started with us last week, went from $39,000 to $400,000 back down to where they started. because they didn't answer that second question. How do I know if it's still valid? And these are the questions that we go over in the boot camp. I showed you to them last week, and this is really where I give customized coaching for everybody. It's your job to tell me when you come into our community, how can I help you? What are the biggest roadblocks you have right now? What part of trading do you not understand? You know, what's interesting is a lot of people have no problem accepting risk and putting trades on because we want to make money. But a lot of people just don't understand the downside of the market and if it changes. Here's the thing, and this is how I used to do it on my trading floor in New York City, and I'd literally have a microphone just like this. Somebody would say, I'm in the trade, I know the stock, I'm not getting out of the stock, and it keeps moving against them. Keeps moving against them, and they're holding it. And I'm like, what are you doing? It's proven that the ID you got in is no longer valid. So yeah, I'm talking to you. Everybody on YouTube right now is watching this video. All you need to do is make a decision. How do I know if it's still valid for the reasons I got in? And are those reasons still here? So I'm going to shock you out of this right now because this is the way I used to do it on my trading floor. I would say, okay, let's use John as an example, right? John can take it. I'm gonna use John as an example right here. And by the way, thank you for that, John. John would be in a trade, and if John happens to be hanging on to this, and he did all this research, and he loves the idea, but it's going down, and it's going down, and it's going down, and I'd be like, John, what are you doing? He's like, I know the stock. I mean, what are you doing? I would tell John, look, I understand. You have to hold on to that trade because the stock market is probably going to close tomorrow, never open again, and you'll never have another idea to make money again. Yes, hold that trade, that bad losing trade, as long as possible, because there will never be another opportunity for you to make money in the stock market again. So it's a good idea to hold that trade. No, it's not a good idea. Our job is to protect our capital, work the positions for as long as they're still valid, and if they are no longer valid, make a different decision. Here's the thing, though. You need to do what we teach is you need to write down what you plan to do before you do it. Why? Because when it gets to that point, and if you have to make a tough decision, you're going back in time and listening to the advice you gave yourself. And let's go to Glenn. Glenn is going to say, hey, Glenn, if we're trading Google and it breaks this level, gosh, we really like it long term, but if it gets down there, protect that capital. If this happens 3 days from now, I need you to hit the road because we need to get that buying power back to put into a different, better idea that looks good now. Here's the part that a lot of people miss, and let's actually bring this into the equation. So if we're taking a look at Google, and Glenn makes a decision that, wow, you know, this is not really what I like anymore. It broke below the 50-period moving average. I was hoping that was going to hold. I was hoping that buying level was going to hold. There was support here, there was support here. Man, this looked like it was amazing. Resistance finally punched through. God, if it breaks 100, I need to reevaluate, right? Probably pull back, probably maybe even get out. Now, here's the part that one more paragraph, one more sentence that will save everything for you, because the big thing is I can't get out. I love the idea. I can't get out, right? Get back in. What is stopping Glenn from putting one more question? What happens if it goes down, continues to go down, and then reverses? So if we scale back, if we get out, the sentence that everybody is missing who is afraid of getting out and that stock going back to where you thought, one more sentence. If the stock continues to go down, I scale back and get out. But if after that happens and it gets back above $100 and it gets back above $100, where in this case, the tech stocks and tech sector start to show bullish order flow. And again, how we're doing that is showing the sector rotation on a daily and weekly basis. So again, you can see technology actually working its way up the list as of right now. If I get stopped out or get out and it goes back up and the group is strong, I plan to get back in. But until then, I'm going to protect my capital and look for better ideas. That is where you wake up every day saying, I don't care what the stock market does. I'm in control of the outcome. Most people are afraid to put that last sentence back in. You know why? Because that puts the onus and the responsibility on you instead of on the market giving you a gift. So don't do what that person did where they had 39,000, went up to 400,000, came all the way back down. Learn to make decisions. And again, we started today talking about a lot of people watching these videos, a lot of people in our community. I know Minvai has a real estate company on the side of doing other stuff, doing other things. while you're trying to get out of your 9 to 5. You want your freedom back, right? Only way that could possibly happen is to learn to respect risk, plan the decisions you made. And look, this doesn't take any more than 15 minutes a day. Beginning of the day or the end of the day, whatever it happens to be, put your orders in the market. That puts you back in charge. So all of these tech stocks that are pulling back right now, again, are you holding it for capital appreciation, or are you looking for a dividend and doesn't matter, which even that doesn't even make sense if it's pulling back too hard on you, right? So what I'm inspiring, hopefully, to think about right now is if the economic numbers come out tomorrow, and specifically the GDP numbers that we're talking about, let's actually get into that a little bit more. So today, let's actually pull up here what we got today, just to give everybody a really, so housing market, right? We got a lot of these. I know John Bates is here this morning, has been really watching some of these housing stocks, Lennar and Pulte. They're kind of still stuck in a box, and they actually rallied off some not fantastic numbers yesterday, but that's another thing. Remember what we talked about with that image right now. What time frame are you trading? What time frame are you investing? If a stock is going up and you believe it should be going down, do not fight it. If a stock is going down and you believe it should be going up, don't fight it. The price is the truth. There's no other way to put it. If you go back to what we talked about with Meta stock and as we started to talk about the tech stocks for this week, the market gives you a price implied expectation of the future cash flows. And that's where value investing comes in, because when the market prices something, value investors are looking for that margin of safety. And we talked about Meta, again, from a risk reward perspective, that the fundamentals say this is a pretty good price. Doesn't mean it's the exact bottom. We talked about the scenario that we're looking for in order for that to happen. But right now, some of these tech stocks are a little bit overvalued still. So that's the part that we got to keep an eye on. So economic data coming out today, economic data coming out tomorrow, some bad earnings or perceived bad earnings from, let's actually kind of dive a little bit deeper into that right now. So obviously we had Google stock yesterday, Alphabet, Microsoft yesterday. This is the big thing. And by the way, this is actually something that I really want to bring out for everybody. Okay. So you see cloud growth slows, right? If you really want to level up yourself and do that extra 5 or 10 minutes worth of work, right? Let's say that you have particular stocks that you really like to trade. And again, John's here, right? Let's say you have particular stocks that you like to trade. John, involved in the real estate industry, likes to follow the real estate stocks. Again, another big part of trading is really dial in on what you like in the real world and find out more about those stocks, because you understand them. You'll understand if the industry is changing. You'll understand if there's something new. You'll understand if something bad. Like, you'll know them well. That's why John focuses on the real estate industry. He's been doing that for 20-something years. Narrow your list, get a little bit more focused. It makes it a lot easier to have conviction in your ideas. So getting back to the earnings plays, right? And actually, this is the point that I want to make. Microsoft, we all know that Microsoft and the cloud business, this is really where their growth has come from, right? This is really what they've been leaning on. But now the number one thing that they've been leaning on has slowed, which is why the stock is taking a hit right now. So if you want to really get organized, Microsoft, cloud business, Netflix, subscriber rate, all of these companies, electric vehicle stocks, deliveries, right? That's what's important. Start to write down the stocks that you like to trade or invest probably a little bit more specifically, because we're talking about a little bit longer term. Write down when you hear the earnings announcement, Google it. Find as many different places as you can. Just find 3. Even that's enough, right? Look up Google, look up Microsoft, look up Apple. We all know Apple, iPhone sales, production. That's why the stock took a hit, right? Tech stocks, chip sectors. Has that story changed, right? Write down the one thing that you see as a commonality of why different websites are saying this is why this stock, this industry group, and the sector are going up. This is why the stock, the industry group, and the sector are going down. Cloud business for Microsoft, right? Subscribers for all of the streaming services, Netflix, Disney, even though Netflix last week said, don't look at our subscribers. Yeah, okay. That's how your company's growing. Of course, we're going to look at your subscribers, right? Write it down so the next time it comes out and you'll have the expectation of this is the headline story that I'm looking at. Again, keep your investing smart. Keep it something that's in your wheelhouse. What matters for this company? the next earnings report. So again, now we're getting into the Microsoft earnings report, and we're all the way down here right now around 234 and change. The headline was not perceived as bullish, and we're down here. So if we now get to these particular trades, and I'm going to show you an example from yesterday because it's a perfect example, short-term versus long-term. You need to know if you're investing, trading, or selling, which was the headline for today's YouTube video. One stock yesterday missed earnings pretty good. The market did not like it. But if you do exactly what I'm showing you here in Microsoft or Apple or whatever stock that comes out and you're trading or investing, you now have that what we call the line in the sand to read the tape. So if it opens lower today, based on the algorithms driving that thing all the way down to where it is right now, we now have a level that matters. This is the level that we lean on. That's the level that we start to read the tape. Very similar to what we did in Netflix last week, which turned into a pretty darn good couple of day trade, right? You can see the trade from last week and go back and watch the video from last week. So here's the bottom line on this. Once you have that line in the sand, you're now going to let the market tell us, is there further upside or downside from this level? So you get that big push to the downside. You'd be like, well, it's a no-brainer, right? It's going down. Not so fast. Not so fast. Let's take a look at a stock from just yesterday that reported and what happened after the announcement. That is what happened after the announcement yesterday. So now we have a line in the sand that will determine whether or not we're going to be liking the stock a little bit longer term or shorter term. So getting back to what we're talking about yesterday and using 3M as an example to future pace how we plan to game plan Microsoft, Apple, Alphabet, Meta, all of these large cap tech stocks. 3M yesterday, massive move lower. And as soon as the market opened, it rocketed higher where it actually went beyond the average move for what that stock does in a day and then kind of settled in, and it's kind of neutral right now. So it doesn't matter if you're day trading stocks, swing trading stocks, or investing in stocks. When those earnings come out, and you know I'm holding it for the next hour because I'm a day trader. I'm holding it for the next week because I'm a swing trader, or I'm going to be position trading these stocks from one earnings report to the next. At the very least, you now have in your pocket what news matters for that stock. How does the market react to that stock? And now based on your trade objective, day trade, swing trade position trade is from one earnings report to the next, you now have a reference point that says, okay, that's where we're starting. And you could now pay attention to that relative to how long you plan to hold the trade. And this is a small part of stacking the order flow. And now we're stacking the order flow from the open, from the day, the week, the month, the quarter. And then we're going to start to add volume on top of that equation. And then you throw on top of that the stock that I'm trading. How is that stock trading relative to the group of stocks? And how does that look over time? Once you start to make your trading so much less stressful, and you're investing, quite honestly, you start to love the stock market again. It doesn't matter what's happening because you know what you're going to do before you need to do it. For those of you out there that are entrepreneurs, you understand what I'm talking about. You wake up every day, you love your business. Some days it's slow, sometimes it's busy, some days you got to pay the expenses, some days you're making money and you think it's the greatest thing in the world. But one thing that never changes if you're running it properly is you know how you're going to run that business every day, and you know you're going to watch your expenses and learn how to make more money. It's the same exact thing in the stock market. You hired yourself as a money manager. I'm going to keep saying that every day. You just need to run that business a little better. The problem that people have is they're not controlling their expenses. They're afraid to make a decision. They're afraid to make a mistake. I got to tell you, the only thing that matters is preserving your precious capital while you learn to make better decisions. The better decisions you could make, the more distinctions you could notice, trading becomes fun because now it doesn't matter what happens. You always know what you're going to do before it happens. Sometimes you take a loss. Sometimes you're booking a profit or trailing a profit up. That's the part of trading, I think, that really confuses people, is that you think that all of that stuff happened before the trade and you're like, okay, I'm done. I made the decision. I'm done. No, the market's still moving. The stock market's still moving after you get in. You got to continue to make decisions. So if what I just discussed is new to you, go back and watch that little segment that I just talked about there before in reference to if this happens, then we plan to do this. Write that down. Take some notes. I dare I say this? I almost said guarantee, but I'm fairly confident you will come back and say, I wasn't doing that much talking to myself or planning. Everybody thinks like you got to put this gigantic plan together and make it super complicated. Just ask yourself the question. If the reason I got in is still valid, cool. If it's not, make a decision on whether or not you want to hang on to that position. And again, I'm just going to give you, real ideas. This is yeah, we know it was, a unique moment in time in the world, but at what point do you make a decision and say the story has changed? So I'm going to challenge you. We'll come back on Friday. We'll have another live stream. I'm going to challenge you to ask yourself, maybe we'll have a little conversation on that on Friday about what questions do you have about trading and the stock market? What's holding you back from being more successful? What's holding you back from quitting that 9-to-5 job, or maybe managing your portfolio in retirement with conviction, or maybe just making enough extra money each month to pay your mortgage? It'd be kind of cool, right? You're paying your mortgage from the market, not from your job. That would be kind of cool. What do you think is holding you back? What do you think is the reason that, man, all these moves are happening? Why am I not making more? Here's the thing. You probably know a lot about the markets, but the markets and just looking at the markets and specifically trading is different than reading charts. Chart reading is getting in the car and turning the ignition. Trading is different. It's called trade management because there's decisions to make. Here's the key. The better you are at making decisions in the moment, gosh, trading becomes so much easier and so much more fun because you're not stressed out of your mind anymore. You're like, I know what I'm going to do already. If the market's driving you crazy right now, especially if the stock market in 2022 is something that you didn't expect and it's costing you a lot more money than you expected or ever dreamed, just got to get a little bit better at writing down what decisions do I need to make. And these are all the things that I teach in our Discord community. I just want to share some of these ideas with everybody here on YouTube because the market's a pretty volatile place right now, and you just want to get control back. That's really the biggest thing. Somebody asked about AMD before. I think it was Joseph. We'll take a quick look at AMD. Right now, again, I just want to be super clear about this, and this is really where the conversation comes into play. And let me actually get this off the screen. For me right now with AMD and specifically this group of stocks, I want to talk about two different things. Number one is the semiconductor stocks right now are showing a little bit of a rally. We looked at AMAT and a couple of these stocks that have actually been bouncing pretty hard to the upside, right? But if we go back to AMD and we see this pullback in AMD hasn't moved in 3 weeks. AMD right now is bearish to neutral. Great. One day to the upside, fine. That's the first day. So the decision right now is in AMD stock. What's your objective? Are you talking about investing in AMD down near $60? Or are you talking about actively trading? You're talking about swing trading. If it's an investment, then you got to do what we did on Meta on Friday and take a look at those long-term numbers and do the financials matter. Maybe we'll take a look at that on Friday. Maybe we'll dive a little bit deeper into numbers on Friday in AMD, maybe a couple other stocks that are reporting right now. From a day trading perspective, and I just want to be super transparent about this. I don't know if Brian Carr is on the call with us right now. Myself, Brian Carr, and a few other members of our community, I trade AMD every single week from a short-term perspective. There are certain stocks in your universe that are just amazing to trade, have good volatility, good volume, offer great opportunity to trade. I'm not looking for a longer-term trade in AMD right now because it's bearish. So for me, again, getting into invest, trade, or sell, I am trading the heck out of AMD virtually every day. Not looking to invest in it yet. I need to see more than 1 day worth of buying pressure. Am I selling it? Well, I'm trading it, so I'm buying and selling it back and forth, and I'm short selling it too. So hope that got everybody juiced up for the market today. Big earnings coming out again. Obviously, some more tomorrow. Big economic data tomorrow. We are in a bearish rally right now. This is a bear market rally, not quite short covering. We just broke out of that 6-week rally in the 6-week sideways price action in the market. I'm actively trading right now, not looking for investments quite yet, other than the same thing that we talked about in the argument that we built for Meta, which reports today as well, scheduled to report today. All right. If we did a good job today, please do me a favor. Give me a thumbs up. Make sure you hit that subscribe button. I'd love to hear back from you. And have an awesome day. And I'll speak to you on Friday. All right. Take care now.